So the past year for Smile Direct Club has not been a good one. This stock, which was at highs, right around January of $16.18, has most recently hit a 52-week low today at $3.32, which has made me say to myself, I need to look at this company again from a fundamental standpoint because it's really been a while. I do have a small position in this company right now of about $2,700 worth of shares. I bought it not too long ago when we saw this thing drop down to lows of $5.39. And I was like, you know what? I'm just going to take a position. I'll do an analysis on it again later on because I did one about 2 years ago and I really liked what I was seeing. I was like, you know what? I'm just going to take a position and we'll do one later. And just because of how busy I've been, I have not done an analysis on this company in a while. So I said, screw it. I'm just going to do it live with you guys. So I was like, I'm going to turn on the live stream. We're just going to kind of record this and we're going to go over what I'm looking at here for Smile Direct Club. So let's take a look at this company. Let's look if I plan to buy more, if I plan to hold, and ultimately where I see this company going in the next couple of years because things are getting pretty sketchy, guys. Hit the like button, subscribe, and let's get started. So company was founded in 2014. They currently have 4,000 employees, and their CEO right now is David Katzman. If you guys don't know, Smile Direct Club operates as an oral care company. It offers clear aligner therapy treatment, so kind of like Invisalign, which is like a big competitor. Company manages the end-to-end process, which includes marketing, aligning, manufacturing, fulfillment, treatment by a doctor, monitoring through completion of treatment with a network of approximately 250 state-licensed orthodontists and general dentists through its teledentistry platform, SmileCheck, in the United States, Puerto Rico, New England, or United States, etc. Basically, all throughout the world. It offers aligners, impressions, and whitening kits, whitening gels, retainers, toothbrushes, toothpaste, water flossers, Smile Spa, and of various oral care products. Company was founded in 2014. Headquarters is in Nashville. Yeah, so when I was originally going through and looking at this company a couple of years ago, I noticed that a lot of the customers who use this product really love this. They really stood by it. One of the biggest things that I noticed by customer satisfaction was that it really worked, but it actually hurt. It actually hurt their mouth. But from a actual like product standpoint, it does really seem like this company does what it is intending to do and does what it says it's going to do. Now, they are moving out to different things. Like we said, normally you think like the big money ticket item that you're going to see, which they also allow, funding for, they will give you a loan for, is the Invisalign. I think it's like $2,500. It's not actually Invisalign. That's like the name brand you probably think of, but basically what teeth straightener kits. So basically they send you out a mold, you bite down into the foam, it creates like a caster mold of your mouth, you send it back, and then they create the treatment for you. It's around $2,500, which is steep, but they do, like I said, offer you a loan. And on top of that too, if you are a younger individual, you probably will just pay for it so that you can have your teeth straight and nice for the rest of your life. Now, one of the things we talked about last time we did this was the fact that there, ways for them to make their money later on is through different services and also through offering other things like which they're doing now, like the whitening treatments, etc., stuff like that. Now let's look at some of the risk checks because this is not too good. So do they have negative shareholder equity? Failed. Negative shareholder equity currently is present. Are they forecasted to achieve profitability? They are not, and they do not plan to be profitable within the next 3 years, which is not a good sign. Is their share price liquid and stable? No, it is not. Obviously, if we look at a candlestick chart from the past year, this thing is not stable. It is liquid, but it's not stable. This thing has dropped 80% within just the past 210 trading days, which is freaking nuts. So, are revenues forecasted to grow? They are forecasted to grow at 26.7% over the next 3 years, and I think 15% next year. Are they in a good financial position? Now, using a company like Simply Wall Street, which I use for these to try to do breakdowns, to me, if they can live for at least 1 year with their cash on their balance sheet, that's not financially good in my opinion, but they say it is, whatever. They have sufficient cash to last at least a year. Is their dividend sustainable? They don't pay a dividend. Do they have sufficient financial data? Yes, they do. Are they concerning recent events? No, they are not. Have shareholders been diluted? No, they have not been diluted. Do they have meaningful levels of revenue? Yes, they do. $696 million. Do they have meaningful market cap? Yes, their market cap is above $1 billion. I think right now, yes, it's actually $1.4 billion. So Let's kind of go through this right now. And one of the first things I want to talk about briefly, we already went through about what the company is. Let's look at earnings and revenue. So revenue, $695 million. That is a lot of money. It's not a small company. Cost of revenue was 1.81 billion or 1.81 million. 181 million. I'm sorry. I don't know why I can't read that correctly. 181 million. Gross profit was 514 million and expenses was 597 million. So ultimately they lost $82 million last year. Not too good. Not too good. Gross margin, 73%. Net margin is a loss of 12%. Not the best. Valuation. Small Direct Club is undervalued compared to its fair value price and relative market value. That is below their significant value. So their price to book is a 7.25 as of right now. Future growth is at 26.7%, which we talked about earlier when we went through this. If we look at future growth as well, like we talked about earlier, they are, positioned to continue to grow. Some analysts, have it around 26.7. The industry is looking to grow 15. The market's looking to grow 14. So it is good that they should outpace the market overall. As far as past performance, they have not performed well over the past 5 years. They've actually been down about 11 to 12%. Financial health. This is something that's important to look at here. This is one of the biggest things I look for in a smaller, unprofitable, company, which is, it's not going to really look too hot because this company is bleeding money right now. Short-term financial positions, assets, 562 million, liabilities, 175 million, long-term assets, 323 million, long-term liabilities, 756 million. So what is short-term? What is long-term? This is one thing I don't talk much about on this channel, but a short-term liability or a short-term debt is something that is owed within 12 months. Okay, so they have 175 million. That's fine. Long-term liabilities is above 12 months, usually 1 to 3 years. So right now they have 328 million on the balance sheet. They have 756 million that is owed. They might not be able to pay this debt. Like, seriously, they just might have to file for bankruptcy if they don't start to make drastic changes right now. And that is a big reason why this thing is really, really dropping. They have negative shareholder equity, which is more serious situation than short-term assets not covering short-term liabilities. We talked about that. And this is more serious than short-term assets not covering long-term liabilities. This long-term liabilities is freaking nuts. This mound of debt that they are continuing to grow is crazy. And you can see this even better here within the balance sheet section here. The debt is freaking nuts. It is crazy. And when you have that much debt, it snowballs itself. No matter how great of a company is, if you have that type of debt, it doesn't matter. Think about if you had that type of debt within your own personal life. Like, it's just nuts. Obviously, there is no dividend right now. There is no future payout right now. Management. So David Katzman has been there for about 3.5 years. We talked about him last time. He is compensated a whopping 1.66 million a year, which is probably not even considering, any other stock, ownership that he gets or anything like that, which is probably not doing too well right now. You can see top shareholders of the company right now: Vanguard, Victory Capital, Clayton, Dublier and Rice, 683 Capital Management, key information, yada, yada, yada. All right. So overall, what do we think about this company? I'm not buying more. We've talked about this before. The product is great. There is big competitors out there with like Align, ALGN, which is in a much better financial position than this company is in. The mounting debt is a serious issue. They are forecasted to grow, which is great, but I don't know what they're going to do about this debt. I really don't know what they're going to do about this. And you can see that it's not the sector that's getting beaten. Align, their biggest competitor, is up 53% this year, right? They're forecasted to grow at the same amount, 21%. They're actually forecasted to grow worse than Small Direct Club, but their profit margins are a little lower than they were the year before. But as of right now, like their balance sheet is so much better. Their financial health is so much better. Look at this. Liabilities, long-term liabilities, 343 million. Their assets are 3.19 billion. Short-term liabilities, 1.79 billion. Assets, 2.46 billion. So like they really are in such a better financial position that they could just undercut Small Direct Club if they really wanted and put them out. I don't know if that's necessarily going to happen. To be quite honest, I'm not buying more Small Direct Club. That debt worries me. I am going to hold on to the position that I currently have. And I do think that if they can work around this and somehow start to tackle this debt pile, that we could see this company be massive in the future and a great investment. But as of right now, it is ridiculously risky. Guys, I hope this video helps. Hit the like button, subscribe, and I'll see you next time. Peace.